The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the January 6th, fantastic Friday edition of today's Trader's Edge show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And of course, the easiest way to do that, it's to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go check out the circumstance of these markets. We get to go see what the bulls and the bears, what the buyers and the sellers are communicating to you and I at just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, and more importantly, I'm here to serve you. So feel free to pick up that phone, dial on in, 877-927-6648. Of course, internationally, 727-445-1044. You can send me an email, steve@tfnn.com. I'll do my best to get to your email. And, of course, a ping inside the Tiger's Den will do. Any ping will do. And what do we have going on out here in the markets? You've got the Dow up 89 points. So let's go ahead and get this show started on Fabulous Friday, because you've got the Dow trying to get to that $20,000 mark. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. As I said, the Dow trading out right now, 19,988, 12 points away from hitting that 20,000 mark, as if that is going to be some wonderful, magical thing. Perhaps it will be. The S&P is up about 12 points right now, trading at 2281. NDX 100 feels like it's a pity party because nobody's even paying attention to the fact that it cleared 5,000 a little earlier ago. It's up 49 points, trading out at 5,013. NASDAQ Composite got above the 5,500 mark. It's trading at 5,532. Russell 2000 trading up 2.7 points a week, only 0.2% to the upside. It's the NDX 100 that is the leader, by the way, percentage-wise. New York Stock Exchange nearly flat on the day. It's up 10 points. Gold is back $6, trading at $11.74. Silver's back 10 pennies, trading at $16.53. Light sweet crude up 20 cents. That's trading out at $54.88. Leading the charge here, dollar-wise, to the upside, it is Priceline up almost $21. Amazon is up 17. Google's up about 13. Price Smart is up 7. Greenbrier Companies is up $7. That's about 17%. Chipotle's up 6. To the downside, you've got Regeneron Pharmaceuticals off nearly 6%, $21 and change. ICU Medicine or Medical or something, ICU Med is in the ICU unit, down 8.5% or $12. Martin Marietta's down 6. Eagle Pharmaceuticals, that's off $5. Shake Shack down 3. So we probably ought to begin by taking a look at the Dow. And Dow is bugging me and taking away my legendary sense of humor. Oh, that's from one of our dinners out here. But let's take a look at the Dow. If I would have told you, so many of you have been listening in to the show for years now, right? And some of you have been some of you were present back in the different October time periods where the market was just simply careening to the downside. You might remember, some of those time periods out there. And I stepped in and said, the market is making a bottom. The market is made, and everybody, I got cards and letters and all kinds of stuff, not from everyone, but from many people saying, what in the Sam, it was not even that kind, are you talking about out there? And voila, what the market did was it formed a bottom. In a couple cases, to the exact day. Now, a few days ago, you and I, yes, Ebola, exactly. Ebola was one of those instances out there, one of those scares. A few days ago, you and I took a look at a couple of charts. And what we said, or what those charts had forecasted, and it's the same charting tools and patterns that I've used to be able to call those October bottoms and other bottoms, by the way, out there. Those same tools said that the Dow would make its high on January 6th. Now, the last time I looked at the calendar, it's January 6th, and we've got the Dow heading off into the distance, probably going to clear that $20,000 mark. I would imagine a day like today that the Dow may finish at its highs. All the markets may finish up at its high at their highs today. That's not so much whether they do or they don't. That's not really a big deal here. But days ago, even look, newsletter subscribers have been looking at this date. Even myself, sometimes I don't even believe always that it's really going to play out this way, because many times I have to say, really, is it really just that easy? Sometimes it is. So the Dow is expected. You and I, we've anticipated that the Dow would actually make its high today. Now, I'm not referring to, as you know, like it's all-time high, forever. We now just entered the bear market. It just happened today. No, that is not what we are suggesting out here. But days ago, we probably would have looked at each other and said, really? Is it really that easy out here? So let's continue to take a look at the Dow. So we know the Dow is supposed to make its high today and then start trading lower. For what period of time, we'll come back to that. First it has to actually prove to us that's going to in fact do that. Well, being up at these levels right now, I think we're at a new all-time it's reached a new all-time high out here, not necessarily on the close. Has it? Let's see. The high from December 20th was 19,987. And so far we are at 19,999, 63. 19,999, 63. You're kidding me. We've missed it by 37 pennies out here. Are you kidding me? I didn't realize actually we missed it by 37 cents. So just really walking back in from lunch out here, but that's neither here nor there. So I'm gonna look. I'm a CPA, cut, paste, and assemble kind of guy. I like to round things. I'm giving it. I think we should put on the 20,000 hats first. I mean, just from a rounding standpoint, it actually hit that number out there. Now, what else do we want to pay attention to inside of the Dow? And can price, I want to take a look at both sides of the trade. It's incumbent upon ourselves to be able to do that. Of course, we know if the Dow is going to continue higher, and it says, Steve-O, I don't really care about your Ebola call, some of the other calls out there with regard to bottoms. You just can't pick a top out here. Well, if I can't pick a top, then where's price going to head to? Well, in the case of the Dow, we know we've got these nice horizontal trading range levels, and the Dow would then target the 20,254 before it would run into its next form of resistance out here. So on the bullish side, and basically I'm full of whatever it is you might want to stuff me with, and you're on that, you just simply believe there's just no way the market is going to turn around. Where the Dow should head to, you should be looking for another 250 points. It's not really Dow 20,000. It's more like Dow 20,254. This is Steve Rhodes with TFNN. We'll be right back. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. So a couple of other things for us to take a look at. And I think what we should do, really look at both sides of the trade, because some of these timing models that I work just simply flat out fail. And so we have to take a look at, we have to anticipate that they're going to work until they don't. And at this stage here, they have been working. And so we're going to continue to look at both sides of the trade. When we take a look at the Dow Equity Futures contract, that's what we have up on our chart right now, we can see that there's significant resistance up at a price level of 19,933. The actual high today, 19,925. If, in fact, the equity futures get up there inside of the Dow, that'll get us into that $20,000 mark, so we'll take care of that business. But only if we see a close above that TAS weekly market profile, 19,933 again, would there be reason to believe that the top that we're anticipating is not in. So it's going to be a key number to be watching today. If we get a close above that level, then, Lee Corso might have a reason to say not so fast. Now, what's interesting as well about the Dow, if we take a look at its advanced decline oscillator, that's what we're going to see at the bottom portion of my screen. You're going to see that it is sitting at minus 0.49. So it is below zero. Now, when the price oscillator is actually below, not the price oscillator, the advanced decline oscillator, you got so many oscillators coming out of my tuchus out there that sometimes you got to make sure you pull the right one out. In this case here, the right one would be the advanced decline oscillator reading. Again, it's taking a look at daily advanced declines and taking a look at the difference between two exponential moving averages, the 39 and the 19, but you don't really care about the minutiae and the details. You just simply want to know where it is, and where it is below zero. When it's below zero, the meaning behind that, and by the way, we have been below zero since the trading session of, let's get this correct, Amundo, December 28th. So we've been below zero, or it's been below zero since December 28th out there. When it's below zero, especially for a number of days, what it's communicating to you and I is it's actually that sellers are in control. So for those of you that believe that there's a lot of distribution going on at the top, now remember the Dow is only 30 stocks. We don't have a confirming signal in a couple of the other larger indices out here. But with regard to the Dow, and because that is really where the party is, and I don't mean to be a Stevie Downer out here, but this is what the message of the markets is. Now, you get above zero, it changes that message, but it is not above zero as we speak right now. And so that has got to make you say, or should make you say, something to think about. Now, let's go see what else. If we take a look at the Dow right here, let's go see. Oh, I don't know why this is not updating properly. Son of a gun. Well, let me do it. Well, let's give me a moment here. Let me switch up and try something else out there. I've got to figure out. So here's something else that we know about the Dow. This is on this chart here. It's worked. It's missing a couple of my tools, but that's okay. If we take a look at the Dow, you can see that price is moving higher and doing less relative energy. Now, just by virtue of doing that does not make this a bearish pattern, but it is a signal to you and I that there are some problems with regard to this move higher. What would be needed in order to confirm this potential top, short-term top, may be a little bit longer than the shorter-term top that you're thinking I might be saying, but this is neither here nor there. It needs a bearish reversal signal. Now, we had that back here when the first time that this pattern poked its head at us, and this was back on December the 21st, and we had that little gap to the downside on December 23rd out there. That was a confirmation of that pattern. We've seen this bearish engulfing out here that formed on December 29th. So that high is an important high. Closing back below that high of 19,981.11 today, and you're at 19,990 as we speak right now. That would be a failure to get above a resistance zone. And again, we're just focused in on the Dow, but that again is where the most amount of focus is inside the media. And I want to be able to share with you what it is that I'm looking at, which really support the seasonality of the patterns that are out here that suggest that the market, the Dow, is supposed to move higher into January 6th. If some of these patterns that you and I were looking at weren't here, then we'd say, well, geez, there's really not a sign of a top. If we take a look at the wave counts to the upside, here's where things could go awry, so to speak. But as I see here, it looks like you've got one of Basil's instant restarts out here. So we're not in leg G, that's for sure. Probably in that fourth wave that we've hit today, letter D out there. So that says to us, okay, we know markets can certainly turn after that fourth wave. So you've got price also, as you noticed on this chart out here, is below that oscillator unchanged line, which is a 20,086.65. Closing above the oscillator unchanged line I would then have to say, hey, you know what? The original the target of those horizontal trading ranges in the 20,200, that's probably a foregone conclusion. It is not a foregone conclusion as we take a look at the charts that we have just done for the Dow out here. Now, let me put this chart back up here and take a look at the New York Stock Exchange. Not that you or I can trade it, but it does have interesting patterns that are out here. And we take a look at the New York Stock Exchange. Yesterday's move higher actually did take us into that seventh wave out here. The market hasn't really cared a whole lot about those seventh waves, but you and I are just simply never going to ignore them. We're going to understand that they're out there, and they show the potential of when the market can make the most significant either declines or advances out here. So you are in, it is in. Even if we make a higher high today, we're still in that zone. And you can see that yesterday, price was moving slightly higher, doing less relative energy out there. I assume that is the same pattern today, but not until we get above yesterday's high. I would actually know when that line on my chart would then extend to today's candle as well. Price, however, earlier today at about 10:30, price was below that oscillator and change line, which was also giving us a bearish reversal signal, and then that would have cemented the deal. So really the close today is going to be very important out here. In fact, if it really is just distribution going on out at these highs, the question is going to just simply be, when does markdown begin? Much like the department stores, you know, I haven't been to one in a while, but with all of them basically closing their doors, my guess is that markdown period has more than started. And there's going to be a markdown period inside of the indices as well. The question is more like when, not really if out here. But that if that we're talking about, just a natural decline of 61% or 38% will seem like a fairly large move. So New York Stock Exchange has some potential for a topping pattern. but we don't have a confirming signal as we speak just yet. Let's stay here and take a look at the other indices. Let's go take a look at the S&P 500. Let's go see what it is doing. Is this thing moving higher, doing less relative energy? I don't know the answer to that, but voila. It most certainly is. In fact, today is day number 1 for that pattern. If we do the wave counts out here, see where we're at. We are in potentially wave number 6 out of 7. Or it could be more like 2 out of as many as you want, but 2 out of 7 out there. But the key is that the S&P is moving higher, doing less relative energy. Now, the problem with regard to the S&P is that it's traded above that oscillator and change line, 2276 to be exact out here. However, today, a close below 2276.96 as we speak right now would actually be a bit of a failure. It's a number it'll change by day's end, but it'll be pretty close to that number. I'd write that down on my pad of paper. Steve Rhodes, TFNN. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. TigerTV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. TigerTV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So, we've really spent time taking a look at the indices out here. Most of you know me as Stevie the Bull Rhodes out here, not to be confused with Sammy the Bull Gravano. Is that the guy's name out there? And so as such, and it's really always been about the markets or been about different timing models that we have. And amazingly so today, the timing models say that the Dow makes its high. And there's a couple of different scenarios that could play out here, but the first one has to be confirmed before we have to worry about scenario number 2, 3, or 4 out there. And what this show is really all about is keeping calm in all markets, being able to anticipate what the markets are going to do, understand the reasons why, look for those patterns that are in play that then can confirm whether or not what we anticipate is actually unfolding out there. So we're little detectives, we're little, we're little Columbos out there, for lack of any other detective that we can find. Now, it's been pretty quiet out here in the hotline area. That's items or requests inside the den, as well as in emails. But I do see that Tom has sent in an email, said he bailed out of the Nuggets yesterday at 5 minutes to 4. So good for you. Wondering what you think about easing back in today on the pullback on lighter volume. So let's go take a look at the GDX out here and see what it is doing. So we'll just first start to make our decision from that. So as we take a look at the GDX, here's one thing, Tom, that you might want to consider is one of the things that the GDX did yesterday, we pointed this out, was it clearly broke a descending trend line. Now, that's a descending trend line. Takes us back to the high from August the 12th being your first touch point, second touch point being November the 9th. Now, you broke it with a wide price spread. That's by the gap to the upside. And as you just pointed out, with really, in essence, accelerated volume. Yesterday, 135 million. Today, the pullback on 45 million shares. Now, let's go ahead and add our TAS market profiles, see what they do for us, see if they can help us, see if anything lines up here. So we'll turn those on, both daily and weekly. And you have a brand new daily profile, Tom, that just formed today. How about that? Now, the beauty about that is when you have new profiles that form above prior ones, it too is a bullish message. Now, the top of that box is 22.58. We're trading below 22.58. What I would suggest is that, no, you don't ease back into it today necessarily, that you wait for a price to pull back a bit more. And that bit more could either be to retest that trend line that it broke out of, a test and rejection of that area. Now, right now, today, if price we're going to get back there, it's probably the high of yesterday, which was 22.01. This is trading at 22.20. And I would go ahead and base your trades inside of the junior nugget and the grandpa nugget out there based on what's going on inside of the GDX chart out here. Another area or price point where price could easily pull back to would be 21.44 out there. And then if not 21.40, now the nice thing about that 21.44 area, which is the center of the box, is you've also got a little rising trend line out here off of the low in December 20th. So that's the green diagonal line that's going up on my screen. So my answer to your question is no. I wouldn't jump into it today. I'd really wait for price to try to come back and test support. Now, on the other hand, if price were to close back above the top of the box, 24.45, then maybe you could consider it. But I just don't see a reason for you at this stage to not consider waiting until Monday. You took your profits. You certainly had nice profits on that trade out there, and no reason to have to jump back in at 134 in the afternoon. So if I go ahead and put up the JNUG, and we just try to identify a possible price point there, the only thing that I would use here, you've got a small little rising trend line, but I would say junior nugget probably pulls back to about 624. Straight at 696 right now. So take a look at that 624 area, but also do it simultaneously by taking a look at what's going on inside of the GDX. And inside the nugget, the NUGT, we're going to get the same type of read there. See if this will populate for you. So we're looking at a pullback here. You know, I would say in this instrument, you're looking at about 844, but I would say lower. I'd be actually more comfortable with this pulling back into about 788. So around the 788 to 844-ish type range out there. Again, try to time this with what's going on inside of the GDX, and that was for Tom. So congrats on the trades inside of the mining sector. Now, the mining sector is also feeling some pressure because of the Japanese yen. So let's go take we know about this correlation. Of course, it's the daily correlation that we have out here. Yesterday, and many times we've taken a look at the 10-minute correlation. So we know that look, these three instruments, and usually three's a crowd out there, but menage a trois of gold top panel, Japanese yen futures center panel, the bonds, the bottom channel. They went to the Fred Astaire School of Dancing, and they can really do a waltz out there. And it's price direction out here. And if we take a look at that center panel, the nice thing about this, let's do this. We know that the dance steps are there. Let's just switch over, take a look at the larger chart. So let's go ahead and put that out here, 6J, and we'll look at that didn't work because it's a daily chart. Somebody's trying to figure out what was I actually typing in there. So now let's go type in the correct contract out here. And as we take a look at I thought it was, there we go. Here we can see that what price is actually, so now, Tom, I guess I'd be talking to you again because you asked. And so the larger influencing factor inside of the movement inside of gold, and therefore then the influencing factor, which would be the movement inside of the mining sector, is really going to be the Japanese yen. Now, yesterday it was nice because price finally broke above its TAS daily profile, which was a 0.86295. Today it's pulled back. But what it's really pulling back into is a trend line that you can see that so price may be pulling right back here. I'd still say, you know what, sit on the sidelines. Know that the yen may hold support here. If it doesn't hold support, then the yen's going to pull all the way back into the 0.8503 area, and that's where you would then also start taking a look at what's the message of the mining equities. In this case here, you're looking at the entire basket. But you do have yen futures pulling back into this level of potential support out there, which is nothing more than the rising trend out there. As long as we're in this area, let's go take a look at light sweet crude, right? Let's take a look at light sweet crude for our man Garo. Garo was taking a look at getting into the UCO. He certainly, or the SCO, certainly he has not seen that failure yet. In fact, we can put his chart up on the screen. Let's just confirm that. You don't want me to be talking, it's always nice to actually talk with some facts. That you can back them up. Whether you agree with the facts or the interpretation of those facts is a different story, right? You can tell the same story to two different people. You can come up with two different answers out here. But here, if we take a look at the daily chart for SCO, we can see that parabolic SAR dot now today for my system is priced at 65.70. So Garo won't step into that trade until he sees a move above that level. His is going to be slightly different, but so what's light sweet crude doing? Not much, but it certainly hasn't given a sell signal. Steve Rhodes with TFNN. We'll be right back.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry, powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. It's a little bit of conversation inside the Tiger's Den about the VIX Index. You and I, we looked at this. We look at it most every day. And yesterday, I believe it was yesterday, we were trying to provide a guideline as to where the VIX was likely headed to. And the price target that we gave was somewhere around the 1122 mark. I know that I must be off by a few pennies there. Might be 1125, 1126. Those numbers are always going to change a little bit during the day out here. But in fact, price made it down to was really the blue line, the bottom blue line, the bottom of that Bollinger Band out there. And so that was our target. Now, the interesting thing and the important thing about what the behavior of the S&P 500 is when the VIX index gets down to the bottom of that Bollinger Band here, then it can get down to the bottom or below it, is where you start to see some type of top in the market form. Tops in the market don't form when the VIX index is up at the upper boundary line of that Bollinger Band, and typically doesn't occur in the middle of that Bollinger Band. And if you just simply come back to time periods, for example, when the market was making a top in August of 2015, you can see that that was a signal. There needs to be some of these, right? You and I are like Inspector Clouseau. When you least expect it, expect it. Well, we don't least expect the fact that the market could, in fact, be forming its top today. And in fact, for those of you that like to sell into strength, well, then today is the day to be active out here because you have the message of what we anticipated. How does that happen to the day? I don't know. Actually, I do know how it does. You do the work and you come up with the result and you go back and you check it out a few times and you say, well, son of a gun out there. And then you have, for example, the VIX index doing what it's doing. But more importantly than that is really with regard to what is the spot VIX index doing versus its forward-looking futures contracts. Because there's many people that say, there's no fear in the marketplace because the VIX is at 11. But how do you explain the fact that the VIX contract for September in 2017 is trading at 1919? You got to like number 19 out there, especially if you're a hockey player, right? Popular number. Of course, they turn it around and then you have 91. But how do you explain that difference? Now, it could be easily explainable, but the most important aspect of explaining that difference is being able to measure the difference between the spot index and its furthest out futures contract, at least the one that has its highest price. In this case here, it is the September contract in 2017. BXU7. You see that. Now, I take you back to a point in time. Remember, we were just talking about the S&P 500. We were taking a look at the VIX index and the importance with regard to the spot index and the Bollinger Band that Stevie uses and how tops will form when that VIX index gets down to the bottom of it. Likewise, and we mentioned the August timeframe of 2015. Now, on the trading session here of August 19th, 2016, the furthest out highest price futures contract happened to be the April 2017 contract. This takes us back to August. Now, the price spread between those two contracts was 79%. My experience is when you get above 70, it is telling us, it is giving us a signal that a top is forming. Tops take longer to form than bottoms do, typically. Why? I don't know. They just do. Just knowing that is important. And what that means is that when you get that first signal, it's often not the sell signal out here. Now, take us and fast forward to coming into the holidays out here. And back on December 21st, as the S&P 500 was, testing its high out here. We looked at that yesterday. As it was testing its high, the difference between the spot VIX index and the August contract got up to 72%, above 70. Now, right now as we speak, this very second, if you look at the bottom portion of my screen out here, you're going to see that the difference between the spot index and September is 70%. Now, where this actually finishes for the day out here is muy importante, because if it does fit now, and I'm a rounder, so 0.697 works for me as points. The higher, the better, quite frankly. I've seen it get up into the 80 percentile out there, and you start to get up into the 80 percentile, and you just got to start kind of like licking your chops, rubbing your hands together, whatever it might be. But really what you've got to do is start looking for some other topping patterns, because this is a signal indicator, not necessarily a trading strategy, although the strategy is, my goodness, you got to be aware of this. You see, there are a lot of people. This is what's really important about what you and I just spent some time taking a look at here. There are a lot of people. Look, whatever you focus on is where all your energy will go. And I promise you, there are people that focus their entire energy on the spot VIX index, which for the most part doesn't mean a hill of beans out here until you really start applying some other tools to it. But they will just get so fixated on that they'll miss what's really right in front of them. If we open it up and just try to understand the other patterns that are out there, then it makes it much easier, especially on days like today, to be able to really anticipate what the market is going to do. And then we just have to figure out where it is and when it is that we want to go ahead and put that trade on. So this has nothing to do with Stevie the Bull turning into Stevie the Bear or Smokey the Bear. This is really about taking a look at these patterns and some of these corroborating signals out here that really help us to understand what the market is communicating to you and I. You see, there is a gift in every situation out here. So those that are looking and focusing on the VIX and they're just rubbing their head and they're saying, man, it's just like there's no fear in this marketplace. It's traded at 1133. Please go out there, get access to the forward futures contracts. You don't have to trade them. You can trade them, but you don't have to trade them. And for those of you that trade UVXY, VXX, and all that stuff, don't be fixated on the spot VIX index. It's not what you're trading. It is not what you are trading. You're trading, in this case here, you're trading the futures contract for February and March. You're not trading the spot VIX index, and those have different patterns than the actual spot VIX index out there. So I don't mean to, sound like I don't know what I want to share with you. I want to lay out for you as if you are the jury. I'm just simply in this case here, I guess I'm the defense attorney. I don't care if I'm the defense attorney or the plaintiff's attorney out here, but just simply want to be able to lay out and you need to go and actually prove it to yourself. This set of tools that I just shared with you, you can spend the time and do the homework and go back and say, I'll be a son of a gun. Look at that. And then you'll really love taking a look at what you might consider to be a low VIX index reading. And you're going to say, let's go back and take a look at what the furthest out futures contract is, and let's go take a look at the spread between those two. And if we get above that 70% level, just like how you and I anticipate on a really bad day in the market, and the VIX index has a one-day rate of change of greater than 10%, what are the odds that the following day is going to be a bounce or a bottom? You know, in that 70, 80% range. This tool works the same. Steve Rhodes with TFNN. We'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN has put together the finest live programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 9 hours a day starting at 8 a.m. as John Logan kicks us off each trading day with the Global Market Pulse. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Mondays and Fridays, catch live trading on the Nadex platform with host Tom and Tommy O'Brien, along with Gerald Martin on the Bull Bear Binary Option Hour. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN, educating investors. Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. Dow is trading out of 19,989. It's up 91 points. You should anticipate that we'll get to the $20,000 level, 20,000 point level. What's important to watch today, the price behavior, is really the end of the day. Inside of the ES Mini, what you're looking for is whether or not it closes back below 2273. If it closes back below 2273, then it's still just simply trading with inside the range of its box out there. The top is 2273, the bottom is 2234. Inside of the Dow, the top of that box is 19911. So as long as it closes back below, it's not trading above, by the way, but as long as it's 19,933. That's the number. That's the weekly market profile. As long as it closes below that, there's no breakout inside of the Dow equity futures. Russell 2000 is hardly doing anything. So if we were inclined to not look for a confirmation of what it is that we believe the market is going to do, what we would do is we would go and short the Russell 2000. because Russell 2000, as we take a look at these indices out here, I'm looking at the equity futures contract, it's really not doing much. Now, when we say what's the market doing, you can answer not much when we take a look at the Russell 2000. The NASDAQ, the NQ, that's the troublesome thing in taking a short position inside the markets as we speak, because it's trading out at 50.12. It's above all market profiles out here. It's above any kind of expansion of its last set of swing points, or I believe it is. Let's go take a look at that. The expansion would be, Fibonacci expansions. There we go. The 1.272 takes you up to 50.33, so another 20 points higher. That is certainly doable, but just because you get to that expansion doesn't mean that that's a top. So, the figure I would have to give you for where the NQ has to finish the day for there to be any kind of failure would be below the 48.97 area. It's doable. If it is doable, shoot, the Dow will finish in the probably finish in the red out here. But that's not what I'm calling for. I'm just telling you what you would need to see. So that is the real wild card, in my opinion, is what is the NQ going to do out here? Because the market is not going to head lower with any kind of conviction with the NQ breaking out to the upside. And my goodness, it has most certainly done that as we speak today. If I look at the 30-minute charts out here, and I look for any kind of topping-ish pattern, what I could say is an hour ago, you did get a TD setup count of 9. Can that be a top? It can, but you then have to see the price oscillator, or the price actually get below the oscillator on change line, and that would be 49.97.73. And you're trading at 50.12 out here. So that's what it would take in order to have a failure. If I look at the 2-hour chart, so we go from 30 minutes to the 2-hour chart, it does have potential from a topping standpoint in that it is in wave number 7 out here. So you've got two topping-ish type patterns that are present inside the 30-minute and the 2-hour chart for the NQ. But beyond that, we're not going to see much. In fact, in the NQ, the exact number that you want to really be paying attention to, forget about the TAS profile, but they're probably almost one and the same, is Stevie's red line, that oscillator on change line level, and that's 49.55. 65 points below where it's trading right now. That's where you would need to see a failure. The problem is that, this thing may only be in its first leg to the upside, because it passed its 7th wave move from a few days ago. So the NQ, so that whole prediction, that whole 45 minutes or so that we spent taking a look at the market and the Dow and the S&P, we need the NQ to participate. So keep your eyes focused on the NQ as well, not just Dow 20,000, for the real secrets to be revealed. Folks, have a wonderful weekend, great weekend, fantastic weekend. Stay warm. If you're in the north, go Finns. Let's see if they can take down Pittsburgh. Take care, folks. We'll see you on Monday.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.